Okay, we need to start over.
Okay.
Um, so you have the intro.
Okay. Well, tell me like one, two, three. We're going to start.
One, two, three. We're started.
Okay. Good evening, everyone. Welcome to the Abundance Podcast. I'm your host, along with I'm Anthony, along with David. Tonight we'll be covering Bitcoin and other things, how the crypto world is holding up, and what I'd like to do is ask you to. I think it'll be a good show, and we should start with probably talking about what's going on with Congress and the SEC. But first, I'd like you to, if you like Bitcoin or any other crypto type news, or you like our show, give us a like and a subscribe and a thumbs up. Leave a comment. We would appreciate it. It uh, helps with our algorithm, hopefully. And what do you think is going on with the Congress and Bitcoin and all that stuff? Or what else? Other news you have today, David?
Well, yeah. First, I'd like to cover what we're going to cover in the show. Anthony's going to be covering the 4 year cycle, and we're also going to be talking about Congress introducing a bipartisan bill to define the market structure bill called the Clarity Act. We're going to cover that a little bit. We're going to be covering basically the SEC's power grab and how it's being challenged, and how Congress is going to be dividing up, again, through the Clarity Act, the various oversight. I guess I don't know what is the SEC. What is that? Is it an institution?
It's a Security and Exchange
I
Commission.
know what it is, but I don't know what you would call it as. It's a
It's a board. It's a board of non-elected officials who decide securities issues such as stock trading and bonds and so on, and what's investment vehicle and what isn't, what's money and what's not, so they can determine its tax status.
So, and then we're going to probably end with a little bit about the current state of the technology of crypto. But before we kind of get into that, I kind of wanted to cover essentially my opinion of what crypto is. And most people get, in my opinion, crypto wrong because they're chasing the idea of some altcoin that will beat Bitcoin and become the new dominant store of value or the new ultimate crypto. And Bitcoin is already superior at what it does, which is transporting wealth into the future as a savings tool. And all the other altcoins and all that stuff, Ethereum, Solana, ADA, SUI, they're not really competing with Bitcoin per se. They are basically tools that are competing, maybe against each other in some way, but ultimately they're about bringing different functions and utility to the financial market. And so you have things like smart contracts, you have oracles, which are tools that bring in data into the smart contracts. You have utility for various things, like there are like Poppy is out there, and it basically functions as a tool to sell houses. And there's going to be NFTs, which are basically unique tokens that can define objects like artwork or titles, and eventually real world assets will become a thing that becomes tokenized, and that will be stocks and bonds and gold, and all of that is going to be part of the crypto market, a decentralized platform that you can trade all these things on. But no one single thing is going to be the ultimate crypto. And really, do you want that? I mean, we already have a centralized authority. And, a lot of people I hear are always talking about XRP being able to flip Bitcoin. I don't think it will, but why would you want it to? Okay, XRP is just a coin for bankers to trade equity between banks. We already have a central banker system, and so we don't really want that to be the dominant crypto, do we? We already have that, and that's what's caused all the money printing and all of that stuff. And so trading one centralized authority for another doesn't seem like that good of an idea. And what Bitcoin represents is a crypto that essentially is not centralized at all. And so, as a reserve currency, that's really what I think the future is it's the ultimate savings layer that you can transfer wealth into the future, which is what we want our governments, that's what we want our companies, and that's what we want to do as individuals moving forward. We want to take our wealth, our time, and our effort and put it into something that's going to preserve that value into the future. And as it stands right now, Bitcoin stands alone there. It's
Yeah,
completely decentralized. Go ahead.
because a regular currency that we call regular currency, which is fiat
Fiat.
money, is a dying asset. It as time goes on, you get less and less of it. Um,
We
as
get more and
opposed to
more of it and less stored value.
That's what I mean. Less and less stored value and more useless paper. As long as and this will continue as long as the government is allowed to print paper. If they get on some kind of Bitcoin reserve, whenever that happens, it will automatically affect the price of Bitcoin. It'll make it go up. So you'll have a hedge against them overspending, and this would, which they will do. And it's not a banking problem. It is a banking problem, but it's also a problem with our Congress being allowed to just borrow money by printing more. And I don't even understand why we're paying interest on our own money. If someone can explain that to me, I would like to understand it.
Well,
But
if you believe in Jesus, I mean, the money is literally, pure evil, and so uh, part of the a great way of having.
money's not evil. It's the worship of money over everything else that's evil.
Right. Well, the issue with the money that we have with a built-in interest rate is there's no way for us to ever pay it back, because for every dollar that comes in, there's a dollar and 3% worth of debt, and so it's a constantly ever expanding cloud of debt
It
that
expands quicker
humanity.
than the money supply. The money
Right.
supply cannot keep up with the debt. It's impossible with this system. It'll never happen. So we'll always have companies going bankrupt and being liquidated and handed over to the banks. And there's no way to avoid it. You cannot show me on a piece of paper how that can ever be avoided when you owe more money than's in circulation.
And so
So
the only thing you can do is either eat up other countries for their value, or other businesses or people. And of course, that's what we're seeing is as we inflate the debt, more and more people get knuckled under. And so, uh, but you're going to be talking about the 4-year crypto cycle expanding to getting elongated into a 5-year cycle. Isn't that correct?
that's correct. Because originally there's a 4-year business cycle, which also the
Has
same
technically
principle.
been expanded.
Yeah, it's basically crypto follows the same cycle, but not necessarily on the same phase. So there's a 4-year cycle, and basically what happens at the beginning is the amount, the way it works with crypto is the amount of supply expands, and this the not supply the supply expands, but the demand doesn't. So so the price is artificially low. And then as people realize that it's artificially low, they start investing in it. And then when they start buying it, then it peaks. Then people realize that the supply is now choked down because of the way the cycle is for I guess when they update the amount of Bitcoin they can mine. It changes in sort of a wave like pattern. But recently, because of the way our economy has been shackled and held down for an extra year longer than usual, um, and it's coming through the speaker. Uh,
Yeah.
the the I checked it; it's running well. because of the way the economy has not been allowed to expand like it normally does after the beginning of a presidency, due to having to cut all the fraud, waste, and abuse out of the government. Um, and these things are all of a sudden, the supply of this fraudulent money has been cut off. So at the same time that our economy is expanding, it's also contracting as simultaneously for about the last year. So because Trump has been cutting the amount of spending, at the same time, our business cycle is starting to boom up. So it's the weirdest prolonged trough that we've had in a long time. It wasn't a depression, but it was a low point for about 3 years, which is a weird thing.
And there's a
Uh,
lot of other weird factors that probably hasn't happened in 100 years. Um, the amount of government workers that have been injected into the it's that's affecting the business cycle, where there was a shortage of workers. Now there's a glut of workers, and that is depressing pricing. uh, there's a lot of factors: the tariffs,
and at 2
the
million
supply chain.
people, yeah, 2 million people who are receiving payments and eating and working here have just left.
At least 2
So
million.
yeah,
So
that they know of, 2 million that they know of. That's the people who have called up and said we're leaving,
So
and
yeah,
the people.
it's and the 4 year cycle, for people in general who might not understand it, is it's since Bitcoin was invented, basically this business cycle has been going on, where it has essentially uh, 3 years up, and then there's a major correction, and prices can collapse as much as 90% in Bitcoin terms, and that cycle was repeating based on, they thought, a lot of people believed, because there was this event where Bitcoin's supply gets cut in half, and they call it the halving. And so that was timing along with this 4 year cycle, the business cycle. And so there was money coming into crypto. It would expand and have this blow off top after 3 years, and then the price would correct, and it would collapse down, and then the cycle would repeat. And that process has happened, essentially. This is the fourth cycle, and so we have this 4 year cycle based on the halvening that people have gotten pretty accustomed to over the last essentially 16 years. And this year is the first year. Technically, we should already be at the peak of the 4 year cycle, and it really hasn't even kicked off. And so all these other factors that Tony was talking about uh, have kind of played into this being a disappointing crypto cycle. But a lot of the most sophisticated thinkers in this, and we're not one of them, but somebody like a Michael Saylor or a Rahul Powell or whatever, has been talking about how not only is the crypto market not kicking off, the business cycle hasn't really kicked off. And so uh, we are
And
just
they're and
getting to.
they're thanking God. They're thanking God that crypto hasn't gone up yet, because they think it's within a short period of time. If it actually works out the way it's looking, with the government taking a active role in supporting it, that it could go up to as much as $1 million in a very short period of time, and within 5 years, 10 million. And Michael Saylor says you'll never be able to get it again. You should be praying to
So
God
yeah,
that it's
that's
staying low.
and this has been and I think part of the play here has been for people like BlackRock and all that stuff to get a good buy-in. And they couldn't just the whole system, starting with Trump's election. It takes a long time for these things to work through the proper channels, the FEC, the SEC, processing them so that they could launch their various, like their ETFs and their various asset vehicles, and get them in place, and buy up enough stuff to actually benefit from this boom. So yes, people like BlackRock and with Larry, my thing keeps dropping off for some reason. I'll
Your
put another
sound?
one in.
Oh,
Um,
your earbud?
Yeah, I couldn't. Were you speaking?
No, no.
Okay,
Go ahead.
all right. It just came on and said I was reconnected. So luckily, I was doing all the talking. But basically, yes, I would agree that a lot of people probably are quite happy with not long-term holders, but anybody that's trying to get in, particularly Wall Street, who has basically shunned crypto. Uh, they are probably quite happy with the fact that they've had this long runway to get the assets, and they've gotten a lot of them. It's quite stunning how much stuff that they have managed to pick up over the last couple of years, since they've really become interested in the last 18 months, I would say. So
Yeah.
pretty interesting.
So yeah, so it's a 5 year cycle, which means next year should be the big year for crypto, unless again something like is happening now continues. But it looks like the economy is heating up, and they are dropping the interest rates, which will increase the amount of money supply floating around. More money that floats around, anything that's anti-inflation or inflation insurance, such as gold and Bitcoin, will go up. So there's going to be
Yes.
more floating around, more money floating around, and not enough stuff to buy, which is a good thing.
Well, China's been printing like mad, but because of the various trade, and so M2 has expanded just at the same time, the Fed here has been letting their balance sheet go down. And so as M2 expanded overseas, and we've had this kind of battle with China, that hemisphere of money hasn't seemed to be coming into uh, our our stock market, our crypto markets, and so and China is deflating very fast, and so it's
Yeah,
been it.
they're in pretty big trouble.
Say what?
So China seems to be in pretty big trouble.
I would say so. It's hard to tell exactly what's going on there, but their real
I didn't
estate.
realize. This is what I didn't realize, David. I didn't realize that their economy was 50% based on basically selling drugs. I mean, that's what,
Well, and that's,
and
I mean, it's off subject, but that's why uh, a lot of people don't understand Trump's interest in Venezuela. Well, Venezuela is kind of a drug front for China. It's their dealer. And the communists, both the Russians and the Chinese, have been infiltrating South America. And so the head of the snake over there is Venezuela. And so, really, this is Trump's way of basically putting the further squeeze on China. And they've been dumping treasuries and crypto like mad because they're selling everything under the sun to keep their economy afloat. So
yeah, people think it's because they don't like the U.S. It's not because they don't like the U.S. It's they're raising capital. They have to. They have to back their currency. They're printing like crazy. So they got to bring the money back into China. Otherwise, the inflation will just go out of control. That's
that
okay with
it
me.
they're in
Them
they're in deep trouble, that's for sure. So
and pretty soon they won't be able to afford to be in a war. That would be awful, wouldn't it?
I'm sorry, we're getting a little distortion. You have to repeat that.
It said pretty soon they won't be able to afford to be in a war.
Yeah, and I hopefully that is true because we don't need them to be fighting in Taiwan. Nobody needs any more wars. We need the world. The only one that makes money are the people at the top on the war, and everybody else just gets poorer and poorer. And I'm hoping that Trump can actually get, for the most part, world peace. It'd be the first time in my lifetime, and I think it would be a tremendously amazing time for the people. I mean, that was what really drove success after World War II, is we had essentially a decade of relative peace where there was nobody challenging the United States, and it was both in Europe, the United States, and Japan. It was basically unprecedented expansion of wealth. I wouldn't mind that. I mean,
Yeah,
I could definitely get behind 1940s to 1950s type financial expansion. You look back at that time, it's kind of a golden age. It's almost like mythical. Everybody had work. Uh, One man could support his family. Nobody, the kids could, be raised normally. We didn't have all this weird stuff that we have happening now. I would be completely okay with getting back to that. So is that essentially what you got on the?
Yeah, so far there's more things, but it'll be more. I think it'll be blended into your other segments. So, um,
Okay. So this kind of plays this 5 year cycle kind of plays into what's happening in Congress. There is a major market bill, the Clarity Act, that is going to essentially spell out the terms and the structures that will help us move into this new digital age. And so some of the terms that people need to understand for that is the security tokens, which are basically tokens that are similar to stocks, and these require SEC oversight. There'll be real world asset tokens. These are assets backed by physical assets or commodities, such as gold and copper. All of this is going to come online and be a token. Um, People have heard already a little bit about the Stablecoin Act, which was what was that called? The Genius Act.
the Genius
The
Act.
Genius Act basically set the terms for people, banks, and other institutions making stablecoin tokens, and that token is pegged to the U.S. dollar. And so the idea behind that is people can back this with U.S. Uh, dollars or U.S. treasuries, and it's pegged to the value of the dollar. And so everybody's worried about China and this country or that country uh, getting rid of securities and selling them, and that's kind of, we're the United States dollar is going to die. Well, this basically takes care of that. And so
Who
it
cares if
forces
it dies? It's
anybody
not
who
even our
wants to
dollar.
create dollars or these stablecoin valued at the dollar to buy US Treasuries. So if BlackRock or if Circle or China or whoever it is wants to roll out their version of a stablecoin, they're going to have to buy US debt. And so
Hmm.
and they have to buy it at a 1-to-1. And so the biggest problem we've had, in my opinion, with the US dollar and fiat money is that it's fractional reserve banking. And so the fractional reserve banking, I believe, is 10-to-1. And
Hmm.
I think it's actually um, gotten to be 100-to-1 under Biden. I'm not sure. But um,
Because there's so many
so,
ways you can get around the laws, anyways. You can
and
one bank
when
can
you have
borrow
it
from
that
another.
far away from your face, you get distorted. It's like your sound is cutting it out, like your
Must
noise
be real
cancel.
directional. Must be directional. Okay. What I was saying is that um, what were we discussing again? What topic? I don't want to change the topic.
We're on stable coin.
Okay. Uh, we just
Senility
need
kicked in.
it did, and the stable coin. Well, let's move on to your next thing because you
So
actually
you want me to go?
yeah,
So
because I
uh,
forgot the topic.
the stable coin essentially being pegged to the U.S. dollar and the United States requiring everybody to buy our debt will ultimately support our economy. And the fact that we're getting rid of, essentially in the future, a 1-to-1 pegging of to the dollar versus 10-to-1 or 100-to-1 is going to, and I guess the hope is stop the erosion and protect the value of the dollar, which the Fed is supposed to be doing, and it really isn't. It's perfectly happy to erode away our value and pocket the difference for their gazillionaire friends. And so, hopefully, this will strengthen the dollar. This new stablecoin act, the Genius Act, and A lot of people are afraid of a backdoor technology and that it's basically a CBDC, and it's not. At least as it stands right now, Congress can always try to change it down the line, but as it's written under the Genius Act, it's actually there's anti CBDC, anti central bank currency laws being pushed through to prevent a top down centralized power, which is what we want. And so banks like Chase and Bank of America and all that stuff are going to have competing forms of the dollar, and they'll have to incentivize people to use their money. And so I think you'll actually see, like they did back in the day, back before the Fed, is a additional benefits like a built-in, in theory, a built-in 5% yield on your money or better, or things like miles and stuff like that you see on credit cards, that kind of stuff being associated with just holding and saving in a very stable coin. There'll be all these additional benefits. And so beyond stable coins, there's obviously utility coins. These are basically things that perform functions and are protocols. And we're going to actually talk about one of these upcoming protocols that has to do with AI. And then finally, what the Trump administration has done is has come up with a transition token, which is basically for the first few years, uh, the first few years, um, you essentially are kind of in limbo, and you can be classified either as a security or a commodity, and that can change under certain conditions. And so it's essentially there's a limit on how much money the companies or the cryptos can hold, but it's basically an incubation period. And so um, what so that kind of covers the general structure of it. And now we're going to move into how it's going and what we can expect. So uh, it's already passed the House, the Clarity Act, and so we're waiting on the Senate, and it's actually had a couple of runs at it already, and we're hoping to see it pass sometime in the next before Christmas. But before this legislation period ends, is it should pass. This President Trump's top priority. And so it was introduced by Representative Patrick Henry and Senator Cynthia Loomis. It's a rare bipartisan bill with support on both sides. I think essentially we have the support. It's just that there are some things that, particularly on the Democrat side, that they're trying to squeeze in. All of it's bad. Everything the Democrats want is bad, and it's basically giving banks more power. And so, hopefully, the less of that gets in there, the better it is for all of us. But it clearly separates digital assets and who regulates them under the various laws of security or commodities. It puts the CFTC in charge of the spot market oversight, which is preferable. We want as much, and Bitcoin falls under that, and so it's treated as a commodity. Um, Also, it we have um, basically securities which fall under the SEC. Hold on a second. Yes. Okay. Well, I am just carrying on. So just get on as soon as you can. I could tell there was a problem. You were having a lot of distortion and your picture was freezing. All right. I'll this when you get on, you get on. All right, bye. So carrying on. Things that basically would fall under or be similar to stocks would fall under the SEC, things that basically appear to be securities. And there's going to be a whole slew of new tokens. There's also going to be allowed, and I already covered this, but there's going to be tokens that basically fall under a transitionary period where they're both or neither considered a security or a commodity. And uh, the reason they're doing that is a lot of these things when they are cooking up, it's not clear because they're brand new technologies. They need to have an investigation, and to lump them in might be unfair. And so, the Trump administration has been pretty gracious in allowing people to have this incubation period where they will feel it out, and investors and the developers will come up with a plan on where they feel they fit, and then they'll apply for it. Uh, um, it introduces regulation paths for digital exchanges and stablecoin issuers. So, um, if you want to be a digital exchange, you can get regulated. And if any company besides big tech firms want to roll out stable coins, uh, such as banks or even very big hedge funds, or technically anyone that isn't a big tech company like Facebook or Amazon or something of that nature, X, any of these big platforms like that, they can't become stablecoin issuers, but almost everybody else can if they meet the regulatory burdens. And so, uh, ultimately, what they're trying to do, is my understanding, is to limit the bureaucratic overreach and from unelected regulators, and have this be a very robust and free um, marketplace where everybody from around the world essentially can get in on it, and that all supports the dollar, and it all supports the American people, hopefully causing a economic boom. There's also, there's a lot of jobs, developers, and stuff like that, because everything that's in the financial market has to be essentially crossed over, and a lot of these things like stocks and bonds are 100 years old. And so there's a lot of development that has to go into this stuff. And there's a lot of, besides the software development, there's all the hardware requirements for getting all this online. There's tremendous amounts of power requirement to get all this up and running. And of course, there's just a lot of hardware, compute power that has to be brought online, because a lot of this stuff is still being done with paper. And so, having your entire economy, basically from the late 1900s, still being the way we do business nearly 140 years later, it's kind of an issue. And so, catching this all up to the new standard is going to be a tremendous lift, and there's going to be a lot of opportunities for people to get involved, and a lot of opportunity to make money, I believe. And so, uh, this is basically, um, this whole bill, the Clarity Act, combined with the Genius Act, and there's an anti CBDC, is basically a pro crypto, pro freedom, pro liberty, in theory, bill. Probably the biggest pro freedom bill that's come down the pike in 100 years. And so, there's a lot of people fear mongering about this being a backdoor to complete control. Well, that's happening in a lot of other countries, and the United States has very intelligently basically tried to preserve the equivalent of a cash system in a technical digital format, and that's what Bitcoin represents. And I've seen a lot of people, particularly a lot of podcasters that are kind of into gold or whatever, or, trying to fearmonger about how this is the end of the world, the end of the line. Obviously, no one knows the future. There is a certain amount of unknown elements, but ultimately what we're looking at is a administration that is pro liberty, pro America, and having all this development and setting the rails as they are by Americans ultimately puts us in position to dominate the next 100 years or more of the financial system. And so um, I feel pretty good about that, and I hope you guys get a little benefit out of the idea having the various tokens explained to you. I, yes, but so is any of the other. So Mark the Shark just made the comment that Bitcoin is too slow to be cash, and it's not really meant to be cash. But there's also a lot of things that could make it scale faster. Really, none of the tokens, even Solana or essentially Ethereum or XRP, none of them have the throughput, not a single one of them to match Visa. And that's an issue. Uh, and eventually it'll be figured out. But once it is figured out, any of those systems, because what you're trading when you have all that speed is you have to have a centralized system. And so you give up a lot of security. And you can have very, very fast transactions on a very insecure system that's hacked a lot. And if you look at if you, anybody out there, if they look at how many times their bank has been hacked this year, it's mortifying. Uh, Essentially, China has all of our data, and all of these things are not being talked about. The security, the anonymity that you can get on some of the cryptos, the finality of things. There's a lot of fraud, in Visa. There's a lot of fraud, Morgan Chase, and they pay billions in fines for being basically scumbags. And yes, you're giving up a little speed, but when something does happen in Bitcoin, it's actually reality. It's not been hacked and the fact of the matter is Bitcoin has never been the crypto Bitcoin protocol itself, which has been under attack relentlessly all this time for 15 years, has never been breached. Have people accidentally given out their password and they've lost their money? Yes. I mean, but that's not actually the protocol being hacked. And almost none of the cryptos that are big have that problem. But like I said, if you look at any bank, you're experiencing a lot of issues there. This is the solution in my mind. And basically Bitcoin is more of a savings plan where you're not going to be doing 10,000 transactions a second on it. It's more of, hey, I'm taking my life savings, I'm putting in this thing so I can give it to my grandkids 50 years from now. And I know it's going to be worth more than it is now. And that's really what you get with Bitcoin. But Ethereum, it's too slow. Solana, it's too slow. I mean, none of these, even the fastest one, which I think is Sui, has got like maybe 10,000 transactions a second, and Visa needs 100,000 transactions a second. So it's all, there is a limit there, but also nobody's really had the kind of investment, even though these things are $2 trillion now. It's got a very low relative level of investment compared to something like uh, Larry Fink's BlackRock. Hold on a second. Hello. Okay. I don't. I um. Yeah, that sucks. I don't know what happened there. we'll keep at it. Try. I mean, it could be that uh, maybe reboot everything and try again in a few minutes. But- all right. So, um, apparently, my brother's internet has crapped the bed, and he's trying to get back on. So hopefully he does. Moving on. One of the things that a lot of people should be aware of is essentially how the SEC has been waging a war of confusion, sue first, explain later, on the crypto market, and has basically scared all the big players out of the United States. Which again, covering Mark's question earlier about how essentially the industry hasn't had the level of investment. People are terrified. VCs are terrified to invest in something that they think that the SEC is going to come down on them, and not only attack their investment in the particular company, but then go after them for other things. And so there was quite a bit of this stuff going on. Coinbase, Ripple, which is the company that makes our XRP, and many others were attacked by the SEC over basically nonsensical um, complaints that they essentially were making up. And they lost a lot of these things. It was so frivolous that uh, all they did was waste a lot of money from these companies and put a lot of fear in the market, but they actually didn't win them. And so they brought a lot of lawsuits that they lost, and it hurt the government's credibility. And this was under Gary Gensler, but that era has ended. The regulation by lawsuit era has ended, and the tactics used against things like Coinbase and Ripple, uh, we are now supporting them and allowing them to thrive inside the United States, which is we want the newest assets and the newest systems to be developed in the United States. We don't want to push them off to China and have China develop the new financial rails and have China develop the new AI systems moving forward. It's suicide for the United States, and I think it was intentional under the Democrats to basically uh, throw Americans as a whole to the wolves and let a new power rise up and become the central player of the world, which was going to be China. And thank God the new administration is standing up to them, and China is being hurt by it significantly when they basically aren't allowed to leech off of us like they have been for the last 30 years. So the man, okay, it looks like Tony is back. Uh, demand the SEC publicly define securities. That's essentially what the Clarity Act has is doing, and it prevents the SEC from using outdated laws on modern blockchain technology. So the SEC was taking rules and regulations that applied to things like bonds and stocks and trying to apply those descriptions to technology that is essentially 150 years more advanced. And it was quite the debacle because, like I said, there was all this lawsuits and stuff going on to muddy the water for investors and scare off VCs and people, both little people like myself, but also companies from considering it a uh, viable path forward for them. Can you hear me, Tony?
I can hear you.
So you're back in the game.
I'm back in the game.
Okay.
It sounds like your earbuds aren't working.
Yeah, it seems like my headsets are dead.
We're on a
I'm
roll.
gonna have to check them real quick. They seem to have croaked.
And I guess what we're doing here is we're covering that the new act, and it should provide a clear pathway for utility tokens and real world assets. So we're hoping that's how it goes, and they act on this quickly and give us a chance to dominate the world again, rather than waiting for the other countries to do it, like David said.
I'm gonna have to charge my earbud for a minute here. So you can. I was actually talking on number two.
Yes,
You
I
can
see
take
that.
that over for a minute while mine charge. I'll turn down my speaker.
I didn't hear everything he covered, but what we're trying to do is trying to get with the new act. We're trying to restore constitutional limits for financial regulations. Before, they just had some shadowy, group of people, unelected people, who are put on board for life, to who decide the winners and losers in a new market. And out there, everyone knows out there that they're going to decide what's best for the American people, because that's what they always do. And they're not going to try to help out their friends who are in the financial business at all. So we could count on them to give us, a leg up to help us, prosper in this country. Uh, it also gets it recognizes Bitcoin, especially, as a decentralized currency, more or less, or coin, exempt from security classifications. In other words, they can't put the demands on it like a stock. A stock is it's a fictional secondary asset. It's a representation of an asset. It's not actually an asset itself. So, but Bitcoin is actually its own thing. It's not representing anything else. So it's considered would be considered a currency, and a secure one, that's backed up by real assets, which would be, in some cases, the work that was required to actually make the Bitcoin. And of course, crypto itself would signify innovation and national security, allowing the dollar to have a backing of real assets, and because this will be put in a sovereign wealth fund also, along with other commodities, because it's really considered a type of money, or a commodity, has a real value. And this could, that way we can, limit the control that the banks and other people have over the financial future of the United States, leaving it more to a uh, more open and easily viewed, policies that everyone can look at. And the way it is now, most of the people, and including me, don't truly know how money works. How, as we know, it's invented basically out of thin air, or by people signing for loans that on property they don't own yet, and then they create money out of thin air and give it to them, and then charge them interest on this money that they don't have, for property they don't own. So the whole system now, besides it being based on fractional reserve banking, which is fraud, the whole lending system itself is fraudulent. And because it really, you can't take a loan out on an asset that you don't own yet. And according to when you get a mortgage paperwork, as I know this for a fact, the first thing you have to say is that you actually own that property. And if you don't, and the thing is you don't, because they won't give you a loan until you own it. And if you don't own it, they won't give you a loan. So both hands are dirty, and the whole system, the way it is now, is it's sort of crooked. And so I'm hoping that the stable coin and the rest, because that was the Genius Act was passed first, that was the big thing I was hoping for, and I'm glad it passed. And the rest of this, if it passes, I think we'll have a bright future, hopefully. Of course, they can always screw it up. They can, regulate it into the ground and make their friends rich again, but hopefully that won't happen. Okay, let's move on to segment three. Is your stuff working there, David?
Well, I have you on real low. Can you hear my speakers?
I can hear you, but I can't.
No, you can hear me, but can you hear yourself?
It just sounds like mumbling in the background. It's fine.
Well, one of the things that people should be aware of is when the real world assets start becoming a viable token, one of the things that people will be able to do, particularly people with a lot of real estate or a lot of property of any sort, they'll be able to tokenize that value without going to a bank. And so what that means is somebody who has 50 or 100 properties will be able to, or even 10 or 2 or even 1, theoretically, I guess, they'll be able to tap into the equity of their homes without going through a bank. All that will be done by smart contract. The value of the property will be pre-appraised as a real world asset. And then once that is done, you'll be able to suck equity out of that and invest in other things. Maybe you'll put it part of your money from your house or houses into something like a stock portfolio, gold, or into Bitcoin or any number of other cryptos. And all of that will be done without a middleman. And so it's already been done where people have tokenized property such as houses using Solana. And I know people that are in the hard money industry, and they just really can't wrap their mind around how this is going to all happen, and the speed of which that it could happen. As soon as the legislation is worked out, um, essentially all you'll need to do is appraise your house and tokenize it.
Well, good thing about it, but hard money lenders are usually a little different. They don't get unlimited free funds for inventing new mortgages. They actually have to have assets, and so and they can get over leveraged, of course, and they have because I've used them.
People
They've
will
gone
lose their
bankrupt.
house that way. People will,
Yeah,
just like people get over leveraged in the stock market and they lose their position. If you're stupid and you do a 50-to-1 leverage on your tokens of your house, that's not smart. But if you're careful, I mean, you can things like you won't have to go to the bank to buy a car. You won't have to go to the bank to, get the things that the basic loans that you might use for day-to-day life. You can easily do those operations without having to go to a bank and pull down your drawers and have everybody do a colonoscopy on you to find out if you're qualified or not. And then after you go through all that, they tell you no, pound sand.
no, you failed your colonoscopy.
And so there it and it's my understanding that that's because Trump is a real estate developer. That is a key thing. So your gold certificates, your silver certificates, or even your physical gold or diamonds, your artwork, your theoretically your rare guns, all of these things will be tokenized as I mean, you'll have that option, your real estate assets, and you'll be able to draw equity out of them and use it for other things in your life. And that's a key point that because Trump got debanked. And so and almost everybody, whether it's JD Vance and all these people up and down the administration, they're all crypto holders. And so all of them understand the trials and tribulations that we've all gone through, being debanked, and how they've tried to choke off the growth in the industry and investment in the industry inside the United States. And it's my understanding that Trump is trying to completely reverse that and allow for the development of DeFi and real world asset tokenization, all that stuff. It would be such. I mean, think about you could buy a fractional reserve portion of some vacation. So, lots of people have vacation rental properties. Imagine if you could own 10% of one. And so the $100 million property you
Yeah,
own.
none of the stupid timeshare rules would be there.
Well,
It'd
you would
be
actually have equity in the property, not just
not just right
equity
of
in a
use.
corporation.
Yeah, you'd have right
You
of
would
use
actually
on your
own
own
it,
property.
because that's what you do when you do a timeshare. My understanding is you're just getting a portion of the LLC, not the actual properties usually. And this would be different. You're actually owning a portion of some rare thing.
How would you do something with a wasting asset? Say you wanted to tokenize beef. You have a cow.
Well,
I
that
mean,
would fall under commodities, just like it
okay.
does now. Isn't pork belly and all that stuff considered commodities?
Yeah, beef, chicken, yeah, pork bellies, yeah, all
And
that
I
stuff.
actually think that it's inevitable that it will be, and
Because that'll
people
make
will
it a lot
invest in it.
easier for me to raise cattle. Like if I raise 4 or 5 cattle, it'll be easy to tokenize them. But you're still going to have responsible parties verifying that this thing exists.
But
So that's
and I think that that will be mostly automated through oracles and through our smartphones. I think it'll be very easy to build a AI program. You take a picture of the cow and it's like, yeah, that cow is healthy. I don't. I mean, we basically already have AIs that you can say, hey, spit out a picture of a snow leopard running on a mountain, and 1 millisecond later, you got this beautiful cat running on the side of a mountain. It doesn't seem like that would be hard to reverse that and have it be like, is this a cow? Is this a Porsche? You take a
shouldn't be too hard.
picture of
Yeah, but
the.
then what do you do with that thing? You have to have it like in some sort of storage or something. You can't just be driving around yourself when you tokenize it.
I'm sure that you would have to secure it. Um, but a lot of these things are already unsecured. And like it's not like every cow is in a hermetically sealed box. I mean, shit happens. But the idea will be that a lot of this stuff will be down to you and your smartphone. In fact, the last thing we'll cover is actually called the X402 protocol, and this was actually talking about how AI will essentially work with cryptocurrency to develop a protocol that basically works on it's an Oracle protocol essentially that'll allow you to further increase your financial independence. Basically, it's a AI verified transactional protocol that will allow data both ways, and this is going to build on everything. So instead of going to the store and saying, "Hey, I want a Big Mac," you'll call up your phone and be like, "I want X, Y, and Z," and it'll go out and shop for the best things. It will, based on your AI preferences, it'll buy those things using this protocol, and those things will just be delivered to you at your location, which might not be your house.
Hmm.
Anyways, well, I mean, we're ahead of ourselves. So
That's okay.
I'll try to
Well,
turn on my headset again. It's turned green, so we'll see. But you can pick up on segment 3 if you'd like. Start off. See if this works.
well, as stable coins get clear in the rules, especially, and DeFi gets some breathing room, investors will finally get a real transparency with the crushing innovation. Which you want the innovation, you want the transparency. The problem with the current system is it's not really that transparent. It is for you when it comes to tax things. For example, when you buy stock and sell stock, it's very transparent for the federal government. They get to see everything. But I really, because I worked as a stockbroker and things like that, and it was pretty mysterious what was going on behind the scenes. I'm sorry, we could never guarantee what price we were going to get. Everything was negotiable. It was crazy. Um, so stablecoin issuers must hold verifiable reserves for audits. They must have the actual thing that
That
they're.
is a negatory.
It is not working. And that when the regulations which define the terms to describe these products and services uh, gain regulatory legitimacy, there'll be it won't be up in the air anymore. We'll be able to decide for ourselves if this product is what we want to get involved in. It's not mysterious. You won't have to have a stockbroker explain it to you. You won't have to have the typical people who are actually making money off you explain to you how it works, which is really nice of them. Um, Institutional money will flow into crypto under legal protection. Well, institutional money's great, is absolutely necessary, but there's some downsides to that because they tend to want to control everything. Uh, and this also could drive mass right
where are
action.
you at
I'm
in the read?
I'm about halfway down in section 3 now.
Like institutional money flow?
Am I reading the old one or do I have the new one? That's the problem. When I reboot it, I'm not sure which one I have of yours. Let me go back and look. Right, go back to section 3. Institutional money flow. Yeah, we can keep going from there. Uh, the institutional money flow, which I was saying earlier, this could drive and push and give legal protection to the corporations, which will drive a lot of investment. And when we drive investment, that'll also increase the value of the particular cryptocurrency or service or token. Investors evaluate tokens based on utility, not speculation. We'll eventually get to what does this product do for me? What does this token do? What does this smart contract do? And is it saving me money? Is it more convenient? Is it safer? Uh, we'll be able to look at it in that way, in that fashion. And what
And
type?
we should pause there because I think that is actually one of the biggest things that people do. Uh, People don't understand how to look at cryptos and why to buy them. They get caught up in the hype cycle, and they don't understand what a smart contract is, what a oracle does, why Bitcoin is a good savings asset. They don't really understand what a stable coin does, although we covered it a little bit here. Um, the main way that I would look at investment in any of these things would be to first try to find out, is it something you would use? And so a smart contract for a lot of people, it functions like a lawyer. And so it's a if then statement where you set in a set of rules, and then when these rules are fulfilled, then the contract is executed. And most people
Automatically executed. Yeah.
automatically. Yes, once uh, the conditions are fulfilled, there's no reneging on it. And so what we currently have is we make a contract and two parties agree to do something, and then you do your work, and then the person that's paying you doesn't want to pay you. And so a smart contract, the reason why a lot of people would want to invest in something like Ethereum or a Solana or something of that nature is because that's what it does. It's a smart contract. And the value of the token is actually determined by the value locked in the smart contract system. So if let's say Ethereum is worth $400 billion, that's $400 billion of contracts that have been secured and locked in and trading back and forth. And so that's an obvious way to evaluate it is it's got that much money locked up in it. And so it's what causes Ethereum to go up in value is the money that people have invested. And a lot of how they do that is they do what is called I'm drawing a blank, not stacking. Uh,
Staking.
what is it?
Staking.
Staking. I don't know why I couldn't remember that. But that's a form of smart contract. You're staking the money, which is basically you're locking it up for a set period of time for a yield, usually between 3 to 5%. And all of these smart contracts do that. So that's where a lot of the value is locked. Of course, the other thing that locks up a lot of value in these smart contracts is actually stablecoin. So every stablecoin is built on top of a smart contract. And so, for anybody that's looking at an investment, into a crypto, that is a good place to look. Is what is the utility? Would I use it? Yes, I would use a stable coin. Yes, I would use a contract. So that makes it worth investing in. What does an oracle do? Well, what it does is it takes data from the real world and assigns value to it. And data has dollar value. We buy data all the time. And this data comes into the smart contract and verifies various aspects of the contract, like is the job done? And so that data has value. And so, would you invest in big data? Would you invest in data centers? Would you invest in something like Facebook or Google? Well, these are all basically
And
oracles of sorts.
and
I
these
mean, the
oracles,
data,
from what I understand, why it's so important is it can take things from the outside world that
right,
have real world value. It can and convert it into a digital crypto
up to a blockchain.
platform. Yeah, a blockchain. So it is the interactor, the intermediary between the actual physical world and crypto and the smart contracts.
And so oracles are very important when you go back to the thing that we're talking about with real world assets. How would you verify them? Well, you would, the verification and the storing of the data that would eventually be incorporated into the smart contract would be coming in by way of a oracle. And the number one oracle out there in terms of data transmission is called Chainlink. And so that is how I go about determining what, because there's all this hype out there. Oh, this is going to do this and this is going to do that. And everybody's buying it. You need to get on it. Never follow that. What you want to follow is your own intuition. You go in and there's lots of sites out there. You look up the name of the token. You say, what does it do? What is this token actually doing? And like meme coins don't do anything. If you hear meme coin, you're just buying hype.
Run!
You want to buy something that has functionality and a purpose. And there's lots of things out there that do this. And so there are a gazillion. There's tokens that basically make loans. There's tokens that do accountables. There are oracles. There's a smart contracts. There's all this stuff out there, and they have their niches, which is why there's never going to be a cryptocurrency to rule them all. Like what XRP is doing is taking money from one bank, sending it across border, and so you put dollars in, it goes into XRP, it gets converted into value, it comes out as yen. That's all it's doing. Is that going to rule the world? No. Is it going to be valuable? Yes. Is it more valuable, let's say, than Ethereum, which is a similar thing where you put in value, you do a contract, and it spits out the value to the end person? More people are going to probably do smart contracts than be an intermediary between two central banks.
Because why would you even want this would be a fantastic platform for barter too. I mean, you could actually, if you used AI, you could barter without almost without any. It would be almost like transactional. Not really, but it would immediately convert it to some sort of stable coin and then back to the other product. From one product to another, and it would look like a barter system. So you wouldn't have to be paying taxes on any income because basically a lot of things you'd just be bartering over. You have this much in stable coin in your inventory,
And that's
and
essentially what DeFi is. DeFi is essentially a barter system. That's why the central banks hate it so much and why they've resisted it. Is essentially DeFi is not converting to dollars, and so everything is a dollar. You get taxed when you convert to dollars. It's
yes,
it's the sale
it's only
value of dollars that
transactional.
gets taxed,
It's only
and so
considered a taxable
DeFi
event. Yeah.
converts between various cryptocurrencies without an intermediary step to a dollar, um, and that's called cross chain transactions, and so basically one of the things that they're trying to regulate the most is essentially U.S. DeFi projects having a all the protocols that comply with banking. Um, I actually hate that
I could care less. Why would it have to comply with banking?
because they want to tax
I
you.
know why. They want to tax you. Well,
Right.
too bad.
And so ultimately, no, it's not a benefit. Of course, that's that's really what's holding up the Clarity Act in general is the rules of the road there. The Trump administration is trying to make those as light and lenient as possible, but the Democrats are trying to push, like Pocahontas is always pushing to have as strong of regulation on crypto, particularly DeFi, so that it complies with all the rules and regulations that allow the banking industry to control everything. Um, the what everybody should be hoping for is that things like XRP don't do well. I mean, it probably will do well because there's a lot of dummies out there that think that it's a great thing because it's got a great marketing group behind it. That marketing group is banks. The banks are behind it. The
Absolutely.
same people that devalued your dollar, everybody's rushing in to give them their money back to the same a-holes that basically screwed us for the last 150 years, and they don't
Yeah,
get it.
they've taken 99% of our wealth. If you think about it, every time they
Yes,
devalue the dollar, they
and
stuff it in their
these people
pocket.
are just clamoring to get back in bed with the banks because the banks have a lot of money to push their product, and the only
They have
people that are
unlimited money.
their
They
clients are
literally
other
have
banks.
unlimited money. Yeah,
Say it again.
unlimited money. I said they literally have unlimited money to bribe everyone.
Right, and that is why everybody likes XRP. They don't understand that it's just another central bank scheme. Everybody's worried about a CBDC. Well, XRP is essentially a CBDC.
Yes, I've
Um,
never liked it. Never liked it.
anyways, I just thought we should stop there because that is one of the more critical components of this whole DeFi thing is understanding that these tokens are not all the same. They have very specific use cases, and understanding the use case and the value to the common man, to humanity at whole, will determine how much it's worth and how many competitors are in the space. Like there's multiple competitors in the smart contract space. It's not just Ethereum, it's Solana, it's Sui, there's ADA, there's a half dozen major players trying to do smart contracts. And will they all do fantastic? Probably not. Anyway, so I guess keeping America competitive with the rest of the world, Europe and Asia, really comes down to the financial crypto laws. And so, if we don't get this stuff right and we don't set it up, particularly in the U.S., to be as open and free, and without we don't want every dollar being scanned by the government and everybody knowing what you're doing or what you're buying. That's going to play into, and that's what they're trying to do with CBDCs and why it's important. And the rest of the world is getting them. And the greatest step that we have so far is that the crypto laws are preventing people from being forced into these central bank digital currencies, which will essentially report every transaction that you do because there's no cash to the tax authority of your country, and they if you don't like it, they'll just turn off your money. And so, if you don't vote the way they want, they'll have the ability to terminate your account and pull all your money out. And that's why DeFi and this kind of thing is important, and why people need to really understand what's happening with this new financial system and not try to turn a blind eye and say ridiculous things like gold is still going to be the future. It's not, because the central banks, they don't want something that can't be tracked. And so all these people out there that are gold bugs telling you that's the wave of the future, let's be
It's not.
realistic. Anyways, I'm sorry I'm on a rant. Do you got anything to add there?
No, I agree. It's simply having gold requires you to store it,
Yes. Or
and
even
if you
real estate.
store it, if you store it, you got to have guards. All that stuff costs money. and otherwise someone just takes and shoots the door in and takes all your gold, and it's no way, you don't have any inventory of it. I mean, there's no way to track it after that. And it's how many times during wars have we got tons of gold and loaded it up in a truck and took it away from the home country that had it.
With all of these real world assets, gold, real estate, I like hard assets, but they have impairments on them. How much they weigh, where they're located. You have a beautiful house, it's worth $100 million. It's on the hills of, the Hollywood Hills, and then some douchebag burns it down. You have a beautiful house on the Atlantic Ocean in Florida in Palm Springs. Somebody, rushes a hurricane up on the shore, and you're out of a house. And so, the beauty of digital, it's not all positive, but one of the major things is you don't have the impairment of the physical world as a hurdle, like you were saying. You don't have to guard your gold. You can lock up all your crypto in your brain if you can remember a few numbers. So,
That's the
anyways,
way to go. Not my brain, but other people's brain. They should have it locked up in.
newer, younger brains. That's why you
Correct.
gotta make sure your kids don't hate you. So when
Well,
you're
they don't.
counting on them to remember your money, they don't lock you up into the old home.
Take my $3.
So the potential for new tax frameworks aligning with digital assets. I don't know what that means, but ultimately that is probably the main game here. Is that uh, it's very important for us to get this framework correct. If we don't have a very robust and liberty based view of money, who's going to invest in our country, and how are we going to remain essentially, I mean, we're getting by being the most investable country in the world, which the Democrats are very um, working
But
very
they're
hard to basically eliminate and turn us into a communist China. um, so it's very, this is probably the most important set of laws to come down since probably the 1950s.
I agree.
I think it was Bretton Wood is what they called it. Is the that essentially locked in what is the American way,
Hmm.
and it's they've been doing everything they can to erode the dollar sovereignty for the last 75 years. The banks have basically been cleaning this out, eroding the value of the money, and then putting all that equity into whatever they feel like, which is mostly their back pocket. Um, in theory, if this tax bill framework is done correctly and people don't change the Genius Act, it should reverse or at least stabilize the effects that we've been having with the debasement of our money.
That'd be interesting, because then we'd actually have things such as instead of it, we'd have deflation. Oh, deflation's terrible. Bullshit. It's terrible for the banks.
Yeah, it it's de-incentivized if people have deflation in assets essentially, or their money is deflationary, and so everything is getting less compared to your Bitcoin. That incentivizes everybody to have a mindset of
Investing, keep
saving,
it. Yeah. Saving and investing. Yes.
and that also has lots of knock-on effects. If everybody's thinking about the future and said, well, "I got to spend it now because the world end is near," and we're all going extinct anyways, then all of a sudden all the other things that made America great, Christian values, the idea of building a better future for your kids, those things come into play. And I've always said, if you have good money, it fixes the world. And we have very bad money right now. And if we get good or better money, then the world will look a lot better for us. And essentially, a golden age could happen where people want to invest in the future, they want to save for the future, and
They
they want
want
to
to
invest in
even
things
have kids. They might
and
even
have
want to
kids.
have
I mean,
kids. Yeah.
people don't realize how that affects people's psychology. If you can't pay for yourself, and you're struggling to pay, you don't want to even own a lizard, not a kid, a child. You can't put your kid through school. You can't get your kid to the doctor. Um, it's very traumatizing, and I know a lot of people who have kids that basically work themselves to death just to have a very, very, I mean, not everybody, but a very subpar lifestyle. And that's very common. I mean, I think it's about 70% of the population now is living paycheck to paycheck.
Oh, I believe it.
So, um, I'm sorry. I'm very passionate about this. I start getting diarrhea of the mouth on this one.
Well, what is the because Asia and Europe have these ridiculous rules in place, basically eliminating themselves from the crypto world. How do you think that's going to affect us?
Well, I think that means a lot of Europeans are going to invest here, and they're also basically kicking themselves out of the AI market. And essentially, what I heard, I don't know if it was the '90s, but basically, at some point in time, the economy of Europe was slightly bigger. The collective European Union was slightly bigger than the United States. And then over the last few decades, the United States has expanded now. It's like 1.5 times the size of Europe. And we've grown, but Europe has fallen way behind. Their standard of living is much lower and they're I mean, the one thing they got going for them is good cheese and milk, but besides that, they got nothing.
They got a bunch of new immigrants there too, and those they're not going to be able to kick them out unless they start a war.
Yeah, I mean, they have extraordinarily high energy prices. Europe is basically deindustrializing. Germany, which was their lead manufacturer, because they don't want to be competitive with AI or any of this stuff. And the price of energy is so high that, in a few years, they probably won't be able to make cars anymore. So Germany, which has been basically leading the world in luxury vehicles for like the last 75, 100 years, will actually they'll all go bankrupt.
Yeah, especially with the if he decides to tariff them again. I mean,
And who's going to buy a broken piece of poo car running on an electric battery that's 50 times what it costs to buy in China or the United States from Germany? I mean, and I hear that even the people that are doing all the engineering and stuff like that, they're actually past retirement. Like all the lead engineers and all that stuff in BMW and Mercedes, they're in their 70s and they don't have anybody to make any. They have no replacements
how are these young people's making money?
in
These
Europe.
youngins.
Most people are still people don't move out of their house until they're 45. They don't move out. Their parents die, and then they just take over living where they're. So I mean, home
That's
ownership in Europe is very low. I mean, it's terrible here. We're getting to be the same way. I mean, we've had a massive decline in, but again, to not to get off on all that stuff, that's really what is at stake here with crypto is if this is done right, these kinds of problems, uh the inflation, uh the lack of work, all of these things get replaced. If they have to completely retool the financial system and computerize all of it and modernize it to all be on the blockchain. Think of the amount of data centers they got to build, all the computing systems they got to put in, all the plumbers that got to, be there to plug all those computer systems into water, all the electricians that have to be there to wire up all those data centers. It's a
And
ton
and
of
and
work.
and there's one good piece of news with all this. If we keep up with all this stuff, we don't have to become Europe.
Yeah, well, that's the hope, and that's my whole point is if we can do all this stuff and encourage it to be here, that's basically where we avoid the collapse of our culture. That's what essentially that's what you're seeing in Germany and Europe and France. I mean, they're collapsing. They're losing their culture, and
Well, that's because they all decided to get rid of their guns. Now they're screwed. Same thing with
and
Australia.
it's that it's a lot of things. Uh, they de-incentivized being different. All those countries started really uh, focusing on everybody complying. They kept getting, over the hundreds of years, they kept shipping everybody off that was a little bit of a rule breaker to some penal colony somewhere. Oh, you don't share our religion to the penal colonies. Oh, you want to rob people, highway robbery. You're out of here. What they should have done is put them to work. We didn't ship all the bad people out. We made them presidents.
Bankers.
Or like, this guy's got gumption. Let's make him run something.
They're gonna drink your milkshake.
So it's very intriguing where we're going, and people really should stay abreast of this. It's incredibly important that people follow everything to do with money. And speaking of that, just a little off subject. I was kind of, because we did get a rate cut today, and the
Hmm.
the the stock market and the crypto market kind of collapsed. I wonder. I don't know what it was like,
They
down to
probably wanted it.
110.
They wanted it to. It was down to 107 for a while. I've seen it. It probably wanted a bigger cut.
Yeah,
And now he's telling them he's not going to cut again for the rest of the year. They might not get nothing.
yeah, he's always
He's just
throwing
playing it.
cold water on everything. Yeah, we're cutting, but don't expect us to do it again, because we don't want you to have money. The job market's imploding, and he's sitting in his little ivory tower, $3 trillion building, sipping his tea, and lording over us, and then he comes out and boohoos the market, and he does it every time. Uh, it's he's a terrible, terrible human being. He's got tremendous Trump derangement syndrome, and uh, he's obviously a hater. He doesn't like our current
Well,
administration.
it looks like to me that's where he's moving. Trump is moving. Right now, he's getting control of all the agencies because before he couldn't fire those people, and now the Supreme Court's going to let him fire them. Next thing he's going to move on to is the Federal Reserve. Well, they're special. No, they're not. They'll find out
Well,
constitutionally they don't even supposed to exist.
people talk about the Fed, but it's actually not and they like to say, oh, separate, from the administration.
Yeah,
They're
it's a separate. It doesn't even belong to the United States at all.
right. Well, it shouldn't even exist, and there's nothing in the Constitution that says that we need a Federal Reserve. It was created
Not
by executive order, essentially.
yes, and it's not federal and it doesn't have any reserves. So I think that by
Besides that,
itself,
it's completely truthful.
yeah, they started
And
off with a lie and they've been lying ever since. They're the worst thing that's ever happened to this country.
we got these 300 or 400 people that are these economists, experts on the economy, and every year we get poorer. They're
Yeah,
not very expert, are they?
they're experts at managing our decline, just like doctors.
Right. And you know, again, going back to what this bill represents and the reason that banks have always why there's been so much FUD on crypto is if this stuff actually becomes a dominant form of the financial system, these people are all out of business. If you can
Oh,
tokenize your house and buy a house and sell your car and put your kids through college while ever going to a bank and getting a loan,
I'll have to get a job.
and that's the problem is they don't want to. They for the last 400 or 500 years, bankers have been middlemaning their way to the top and printing their way to supreme power. And all of a sudden now there's this new back-ended tricky system that threatens their existence. And so that's why he comes out and pours cold water on this stuff. And you think it's not really about crypto. It absolutely is. He uh, this whole year has been about him doing whatever he can to undermine the ascent of crypto. So yeah, it
Well,
looks
he
like
knows that when it's in place, there's no need for a Federal Reserve. We'll have a sovereign wealth fund that has nothing to do with them.
yeah, it will be interesting to see how that plays out if that happens.
And what do we need the Federal Reserve for, anyways? And why do we need the Bank of England? And why do we need the World, what do you call it, the World Bank
IMF.
and the International Monetary Fund? Yeah, the IMF. We don't need those things. They're all based in Switzerland, and everyone knows that's where the devil lives. So just look at their super collider and the celebrations they have over there. So that tells you everything you need to know about Switzerland. I know, off on a tangent.
I don't know about the super collider devil worship, so I'm outside. I believe in a lot of weird things, so I'm not gonna.
Well, they believe that they're opening up a porthole to another dimension to let the demons in.
They're
They
opening
want,
up a butthole to the demons.
yeah, isn't that what all demonology is about? Pretty much opening up buttholes. An
Well, I thought
organization
that
that
was just the Illuminati.
no, it's all of them.
It's all the buttholes. Well, so I just want to end on it's something I was actually learning about today. I don't know a tremendous amount about it, but I found it incredibly interesting. Is so there is essentially this new protocol, and it's called X402. It's essentially the agentic economy protocol, a framework for autonomous financial agents that interact with humans, with human oversight over decentralized systems. And so the idea is that you'll have a financial um, AI that is working for you and that it uses your resources with your oversight to pursue through the decentralized economy your best interests, your investment
Mhm.
strategies, and stuff like that. And so it when I wrote it out, it seemed to confuse it a little bit, but the essentially what the example was given is once you have your assets and you have your investment strategy and the things that you're going after, this thing would be trading day and night uh, to support your personal economy. And this X402 is the equivalent of the HTTP internet protocol that allows all the AI and the tokens and everything to basically function over DeFi. And so one of the examples that they were giving is how Grok was given a portfolio and they opened up the API and they let it trade, and that it essentially was up 400% in a day.
Hmm.
And it's because it can scan all the data, and it can read the sentiment from X, where everything is going, and it can gather this stuff as it's coming, as it essentially is happening, and then it can, based on your protocols, and it was just trading in crypto. It wasn't all the whole stock market. It was only focusing on the top like 25 tokens, and it was able to long and short everything basically almost instantaneously. And that's essentially what this is promising. It will allow you to do everything that it, in theory, it'll allow you to buy and sell your assets that you need to buy for your house, your car, that kind of thing. Get you the best deals for that stuff, but also it would allow you to buy food and do all your financial transactions, um, with it seeking the best for you. Of course, this is, you would have to have your own personal AI for this to actually work. And I think that's actually a thing that we could talk about. Is the biggest problem we're having in AI right now is, whether it's Grok or OpenAI or any of these things, is that they're trying to serve a by serving everyone, they're building a camel, and it's just not very good at anything. Like we were talking about earlier, these models start off pretty good, and then they have to comply with everybody's rules and regulations, whether it's Europe or you know uh, whatever, China, the United States, the Apple Store, the Google Store. Once they comply with all that stuff, the AI is essentially broken.
It's intentional. Those organizations are intentionally doing that to it, and
So
demanding in order to be in their marketplace that you take the mark of the beast on your forehead. Is why does he use them then? He just shouldn't use them. He should say, "F you, I'm not using you," um, and uh, and just sell it online. I mean, you can. I could buy all sorts of things on the iPhone store. I also could buy it on the Google store. I mean, what's so hard about that? I mean, they can't sell. iPhone doesn't let you Google. You buy things from the Google store. Is that how it works? I don't know how it works. I don't
go
have an
ahead and
iPhone.
talk.
I am talking.
Are you talking?
Yes, I am.
It's maybe it's this headset is fucked up,
I think it might be. Well, I'll go check to see if it's
because
still
I could hear
running.
you fine before, but
Let's see if we're still running.
no, it's my headset. I I I wonder if I got them wet or something.
Yeah, it's
Anyways,
running. It's run perfectly online, so it's just your headset.
well, that's good. I was just trying to make it a little more convenient for us to talk, because having the speakers on even low, I was kind of trying to keep it down, away from the speakers, but I kept banging my balls with it.
Well,
And I
everyone
know
has
how
their
people love
their
to be
cross
banged
to
by my
bear.
balls.
Everyone has their cross to bear. So yours is you have to haul around your own balls.
So, I feel like that the future could be very intriguing, with where things are going. But we really need to get this legislation, the Clarity Act, across the finish line. If that happens, and the business cycle you're talking about happens, then um, we are set up for a very explosive 2026. Um, and it could be uh, going to 500,000 or $1 million, and the other thing is if it's so explosive and gets so much headwind and so much investment, um, does it even really? Do we basically kind of go into a super cycle where we don't actually really have a correction?
Well, eventually it's going to do something like that, and uh, I just don't know when it's going to happen. That'd be nice. It could race itself all the way up to 10 million for me. I'd be happy with that. You know,
Well,
that'd give me. I'd have enough money then to live on. You know.
for some reason, it's saying that the internet it just we just YouTube is saying we just um,
We
got
lost
thrown
it.
off of YouTube.
We threw ourselves off, or they threw us off.
Um, no, it said that the streaming signal got low.
Okay. Well, I guess that's the end of the show, ain't it?
Is it still playing?
No, it stopped.
Okay. Well, luckily we were at the end anyways. I very odd though. I um but we were done, so unfortunately we didn't get to close it out the way we did, but uh yeah, it just popped up the last when I told you it happened maybe 10 seconds before that. So everything up till then was good.
Hmm.
And I felt like
Yeah,
this was a
I'm watching it. I'm watching it, and I'm trying to see it looks when it ends.
I felt like that was we got 12 views it live stream. So we normally get between 6 and 8, and our best till tonight what might have been 10. And so we had 12
Well,
total people.
it's hey Mike, it's still playing.
It's still playing.
Yeah.
Oh, well, let's wrap it up then, and then I'll turn it off.
Okay.
We're having some sort of internet issue. I don't know what it is, but we're going to close it out. So if you've made it this far in the show, if you could leave a like, subscribe, a comment, mash all the buttons for us, we really appreciate it for the algorithm. And I'm David, and that's Tony, and this is the Abundance Cast, and we'd love to see you again. So let us know what you think. What do you got?
Yeah, everyone, thank you for stopping by. Please like and subscribe and give us a thumbs up and give us a little comment. We need all the comments. Even if you didn't like our show, please tell us what you didn't like about it so that we can make adjustments. And we appreciate you coming by tonight. And everyone have a good night. And I'll see you later, David.
Actually, I'm going to give you a shout in a minute, but I'm going to end the stream.